We're highlighting the 1 month, trading pretty close to an all-time high, just above 5.8%. Pretty big risk premium when it comes to the 1 month. So does the sentiment reflect the reality in your mind?
Yeah, I mean, I think there's definitely the fact that we are pretty close to the X date. There definitely has to be some, um, you know, some measures put into the market to have a little bit of fear about whether or not we are actually going to cross that X date. And, this is always a hard thing in Washington because we tend to go down to the wire. And so it does make it a little bit more difficult for people to know if there is a guarantee that the US is actually going to find a debt ceiling deal and actually get it across the finish line. So I think that you are seeing some risk built in over just the near term as we kind of look ahead to this June 1st deadline. That our view is definitely that we think that the X date is what they're focused on right now. They're focused on the June 1st deadline, as Kayla mentioned. There are some options if they cannot get a deal by then. But I think in general, the players in the room are actually trying
Okay.
to make sure that we do get something done by June 1st.
All right, translate a little DC talk for us. On Sunday, we heard that President Biden and McCarthy had a productive call. This meeting was productive, but still no deal. And we hear the staff's working behind the scenes. Is productive code for something?
Productive definitely is at least constructive and it's positive. So it does mean that we're seeing that they're actually making movement. I think if you look at maybe a week or so ago, you saw them more talking from their corners. Now they're really getting into the weeds. They're actually talking about specific budget items that they can change, they can maneuver, and that's important. So from our standpoint, we continue to at least see progress. Obviously, there was that pause over the weekend on Friday when the negotiators kind of left the room and said they were going to take a pause. But then after that, you started to see McCarthy and Biden get back together, talking on the phone on Sunday, having the meeting last night. I'm sure they'll probably meet again today and over the next couple of days if that is needed.
Okay.
But I think the fact that we are actually getting into the weeds here shows that we are likely to get a deal. And I do think that because we are looking at that June 1st deadline as that X date, no one really wants to cross it because that would have a much bigger market impact. And so I think that they
Right.
are working to make sure there's a deal ahead of them.
A lot of confidence about a deal getting done. In fact, Goldman put out some research yesterday. It was before the meeting. That's important to note. But before the meeting, saying 30% chance of a deal this week, 70% chance of a deal by early June. So it seems there's a lot of confidence the deal will get done. But what about the U.S. credit rating? We haven't heard a lot from the credit rating agencies. What do you see as the outlook on that? Is it possible that the U.S. could be downgraded again as we were back in 2011?
So I think that there is that risk out there. We've actually been a little surprised by how quiet the credit rating agencies have been. I think, if you look back at 2011, though, you did have the S&P kind of give fair warning to some extent that they were looking at doing a downgrade on July 14th. That downgrade then happened after a debt ceiling deal was reached. But part of that was on the fact that they felt that they needed more spending cuts to be included. And part of that was also on process. This time around, the debt ceiling fights are never enjoyable and they're always a little bit gut wrenching. But I do feel like the process this time is a little less toxic. But the closer we do get to June 1st, and if it looks like we're not going to be able to have a deal, I think there definitely is more risk that we could see something from the credit agencies.